So Tuesday, well, we'll talk some stocks, right? We'll kind of talk some movements that I'm kind of expecting to develop going forward overall based on just the price action in general and the timing and the data sets, right? So we had a 1% session decline on Monday. It wasn't really reminiscent of like a distribution, like I said, like within this kind of this pattern right here, right? We obviously have the third low within this sequence, sweeping a bull gap from the 19th of December, filling that gap actually, right? Yeah, basically filling that gap. Um, and what's SPX? So I don't know. And we have this nice pop. We find a higher low, at least like internally, if you want to just break down this kind of structure here. The volume on this candle is not very meaningful. It is post expiration in OPEX, so yeah, it could be something. But like I said, I wouldn't mind like a true push to all-time highs for a true UTAD to develop, especially with the Nvda report tomorrow after hours. I think that is going to be a big time catalyst that sparks the uh, breakdown in the risk on in tech equity, right? So, especially with the candle that we have today, a red to green session, a really nice hourly print that we put in, and then the subsequent continuation. Actually, like a pretty appealing look. Um, I'm not like super bearish on this sequence right now. I'm also not like super long side focused, but there's just not much that I would be very confident in shorting on here, right? We have a little bit of a pop, semiconductors new high. I don't mind that as well. Like I said, the main thing that I'm really looking at is Nvda report, right? We had a big decline in financials yesterday, which, like I said, very reminiscent of the tape beginning to flip. We have a distribution that, in my opinion, has been developing for quite some time now. I think that this was our sign of weak or our reaction in April, and we put in a UT and a UTAD. But the 3.35% decline on Monday's session and the following the subsequent development of a distribution, and really a lack of like strong participation from buyers up here in any meaningful progress, a big like fake out at new highs. This is not a good look, in my opinion. There's nothing that's super vulnerable to me right now, but the financial sector is giving us some red flags, in my opinion, and I think it's very telling. But I don't have any execution that I would really enjoy taking quite yet on those. The healthcare sector still looks really good. I'm still positioned in Mrna. I haven't trimmed any, which might have been stupid, but I don't think so. I think this still pushes higher, right? We have a nice pop on yesterday's session and a subsequent inside bar developing. I really do like how that looks. And Microsoft bled beneath the 395 gap, right? This isn't like super surprising. We saw the base, the reaction, and then kind of a failed buyer off of 395. I'm not like super surprised, right? When you look at this kind of distribution that gives us preliminary signs of a buyer, you have to wait for the character to flip, right? And a lot of this reminds me of Google back here, right? We had the daily distribution, we had the report spark the decline into April, but there were various preliminary signs within this gap from December 2024 that showed us a bidder throughout here and throughout here. But we didn't have a reversal or an opportunity to really trade this, right? We had a really good opportunity to buy this in April and then subsequently continue our position off of the higher low that we found post-April OPEX, and then the subsequent higher low we find off news to trade it into this gap. But we didn't really like have any character flip within this range from February to March. The real opportunity is within this gap that we have from the new week opening gap of March 2024, taking out the September 2024 lows, and then the character flip that develops, right, to add into these commons positions where we have a very telling weekly picture, right? Man, looking back at this, it's so telling. Commons would have been phenomenal in April. But even like an Amazon, a reversion is going to happen. An AMD short within this gap is pretty vulnerable in my opinion, right? I don't think that that's super far-fetched. I don't think that shorting this to the full gap fill from the report that we had in October is viable. However, I do think that an opportunity is developing within here to potentially short this. And Nvidia, right? We're kind of chilling right here, right? We have a little bit of a red to green reversal off open, very you know, hopefully just a very flat day during tomorrow's session, and we can get like a little, maybe if we close tomorrow at like 192, we can get like a small gap to 199, and we can short this to 170, right? That'd be ideal, but we'll have to see how that develops, right? I was looking for a lower high here to be put in within this big time breakdown on Apple. Didn't really get it. Didn't really see the signs within this range. And Meta, I would like a 695 push to short this to 613, but not much, right? We obviously had a really big pop, right? We had like a from the open of yesterday's session. Oh my God, I'm hitting the wrong stuff here. From the open of yesterday's session to the highs, we were up 10% on Mrna. But I think what's happening here, right? So we see this bear gap from the 23rd, pretty small gap. We already filled the majority of it on the 27th. We only had about 1% left to fill, but we did end up failing this on a daily perspective. And what happens here, right? The entirety of the movements within these equities is supply and demand, right? Now, this could be, people buying, people selling, just normally, big catalyst events, fan of charm flows, stimulating the buying and selling, right? And gamma positioning from dealers, blah blah blah. All of that, whether or not you use that as your edge, is buying and selling, right? It's supply and demand. If the demand outweighs the supply, the draw will be to an area of higher supply until there's an equilibrium, and then we have to determine the next steps in a general sense, right? That's why the tape is king, right? Regardless of the noise, the news, the earnings, the flows, the tape is king, right? Although options do move the market. So we have this big move and this kind of weak candle closure, but you want to understand the behavior that happens within this. We want to understand how aggressive the follow through this seller from the gap is. First of all, we close within the confines of the Thursday 6.5% candle. That is kind of a good look in my opinion, all things considered, because of the fact that it is like two subsequent candles closing within the confines of this print. That just tells me when you see that consolidation, that the effort from those sellers is not necessarily getting us anywhere. If you want to talk about effort versus result, they're not getting much of a result and they're not putting in much effort, right? This candle's closed green. We developed another inside bar to some extent, and we didn't really see anything on the hourly that's very, very telling, right? We see a really nice candle that opens up, rallies off the gap down, fails the gap, and then we see some consolidation from the rest of the session, right? So we see a big buyer, and we see very, very minimal strength from the sellers. And then we see the kind of flat open today, a nice spike, and then two subsequent inside bars. Not the best intraday look, but as far as like an hourly and a 4-hour perspective goes, this consolidation within this candle really to me is telling in a sense that it gives you an idea of the strength from the seller within this gap, right? And I think that the supply is being absorbed, right? There's all this selling happening here. We see a really big move off of open today, a breakdown, and then a really nice spark, right? Off of the kind of the weekly closure from last week, and a really nice reversal. I think that this selling is being absorbed, it's being bid, and it's going to be wiped dry in a path of least resistance, whether it be one inside bar, whether tomorrow's an inside bar within this candle is going to develop, and we're going to see a push to 55 to 57. That's what I imagine as the best case scenario, right? This supply is wiped. We have some consolidation developing underneath this gap. If that consolidation occurs with very strong patterns, volume and price action wise, with very minimal progress and effort from sellers, and it's more or less that supply being absorbed, I would not be surprised to see a couple inside bars and a big breakout. Based on the hourly and 4-hour, that's kind of what I'm envisioning here. Now, which I don't think this happens based off just how it's already kind of panning out, I'll even throw that on there, just to see how this behaves, right? If we see the seller get a nice leg off of this gap, right, off of this small little gap remainder, my idea would be to watch the discount, right? If we see the seller show his hand, we can see a harmonic pullback into this 44 to 46 range. That's going to give you a notable opportunity to re-add, to monitor your position. My break-even stop is a little bit below that, and you can monitor it for the move to 55. It's not really super complex. It's just how the behavior is, how supply and demand works, is a very important thing in terms of trading. And right now with this consolidation we're seeing, And the price action, we saw a really big move. We saw the buying kind of fizzle out for a second. We're seeing the sellers show their hand, but I think the campaign is strong enough on this one, not only in the daily consolidation, right? All this consolidation here, the fake out of the report, but on a weekly perspective, that this can push that 55 and that break of structure, right? Ford had a really big spike off open, kind of a fake out candle yesterday in a sense where it's a big time sell off that's kind of big, not big time, but a couple percent sell off that's kind of big, and then the kind of reversal here, bidding the earnings candle open. UNH, I didn't like this yet, and this could still push into the gap, but I do think that a full 3 lower lows off of this May 15th print is more vulnerable. Not much else though, right? TSM, watch for a couple breakaway gaps here. That's pretty much it. Yeah, I really just want to talk about Mrna and Nvda. Now, Nvd is maybe not the best idea, a 2x leverage ETF, but I do think that this Nvidia trade, if it opens up in the right spots, 199 to 170 is a pretty picture perfect trade. And then we can even take like a 185 to like 160 for another opportunity, right? Cover all of it and re-add. So that's all I'm watching. That's literally it. Mrna and Nvidia commons. Have fun. The IV flush is in play, right? I don't know what the implied vol is. I don't mind actually pulling that up real quick. Seeing the implied volatility for the weekly contracts, I would expect like a 9 to 10% move is kind of the implied vol. I'm up 20% on my Mrna position, and I want, let's see, how much more do I want? I want another 8. I want to cover most of my position at 55, and then maybe take some to 60. But let's see what the Nvidia implied vol is. So the at the money strikes are sitting around 81%, 82%. I think we just divide that by 16 if I'm not mistaken. May not be correct. 5%. I would expect this to rise though. Probably tomorrow's session as we see a lot more money come into these options. So yeah, that's my focus.